morning, everyone, and welcome to the European crossover webinar. And I've got the right chart right here. Just want to make sure I got that loaded up right. Yep, do. Okay. In just a second. Not sure why it's showing a background coloring for me, but hold on. Just for a moment. Let me check in the chat room. Everything looks okay. Yeah, I'm going to get this high color background. I just want to make sure that it's loaded up correctly. So apologies on that. Okay, great. Thanks. Because Stelio says it looks fine. Yeah, because I see a green color background. I've never seen that before. I'm not sure what's up with this. And at first I thought, okay, well maybe the borders are I've got it enclosed or something. But I switched over screens and I saw the same thing. So we're in the webinar. We'll just deal with this today. That's a little bit unusual. Never saw that before. Just want to make sure it's okay. But
it looks just as normal, mate. So it's fine.
Oh, okay, thanks a lot. Appreciate it. I didn't know you were up. Yeah, actually, I'm seeing this real bright, well, like a lime green border, at least when I'm seeing it. And I switched screens, and it still showed the same thing. But I'm glad it looks fine. Thanks a lot. Appreciate it. So I'm going to move on. Thanks a lot, guys. Okay, well, we're seeing the euro still kind of plodding along. If you think about it, like I said, it's a bit disappointing, I guess, for those that are long the euro. We've rotated. Look from the highs here. We've rotated nearly 40 pips here. And I mean, and I'm talking about the cash dollar index, but I would have expected a little bit more move here off of the euro. As I mentioned yesterday, heck, at least up to 1250. Even that's from yesterday. And still, we just kind of just gently pushed a little bit high. If you look here on the 2-hour chart, look like, okay, we're finally going to break high. You can see right here. Okay, we come up. And now we're just kind of sitting here. So there's not really a whole lot of movement here. As I mentioned yesterday in the daily roundup, the bunds were making new highs, inversely, obviously, new lows. And I can take a look to see where we stand there. And we're still at very high levels. And let's just go on and quickly move to that. And this is one of the reasons you can see the bunds right here. This is one of the reasons why the euro is having a tougher time trying to garner a little bit more steam, considering how oversold it is. So you would have thought, okay, well, now it's going to break 112 with some bench and some saying overall the market may have looked at that. So the thought that, we held the 112 and now moving hard, you think, okay, you're going to get some shorts, they're going to force to cover. We'll probably jump up into the 1260s, 70s. But what's creating that weight is this move here in bunds, this return rally back here. Now, we knew that, as I mentioned before, this is what caused a big stir in the euro 2 weeks ago as we broke to all-time highs in the bunds, i.e. lows in bund rates, and sent the euro just spiraling lower. And so we quickly sold off, but now, and it certainly didn't help the euro all that much, but here we are moving high back up again. That's going to cause a drag like a ball and chain on the euro, really make it tough for the euro to try and advance with these gains. Let's go on and go back to the main screen. One of the things we did mention yesterday was we did see U.S. yields going to slide back, and that certainly opened the door for this dollar yen to work lower. This 832 we had in place, and I think that was we kept that, I believe, exactly the same for our bias chart. Yeah, we still did. Remember that on the way up the very first time, and taking a quick scalp. Then we jumped higher. We rolled back, came up to 832, dipped a little bit, and we were kind of hanging around here because remember, the dollar was holding up very strong. One of the things we mentioned here with the dollar yen, we said, boy, I'm surprised it's not higher. You'd think at least we'd be around 870, considering how the dollar had moved this higher. But you were seeing this, to a certain extent, a divergence in the sense that the dollar yen just simply couldn't push past this 832, despite, look at the dollar. Look at the dollar just moving up like I don't want to say like crazy, but certainly moving up with some good strength. But here's the yen just kind of like, okay, we come up here, we kind of pull back, okay, and look, where's the strength? Here's the dollar moving hard, and the dollar yen still can't meet that move here that we had in the cash dollar index. So obviously, there's a lot of supply, if you would call it that, to a certain extent, supply here where the market is willing to take it on, even at 832, and we've rotated low. Now I saw in the Asian session that Amanda had actually covered some of her positions here. I know she covered on the yen. There was another one. So anyway, if someone was following on the yen pairs, you may want to scroll back on the chat if you want to see where I think she covered around eight. I think it was at 867 or something. She had another yen pair. I don't know what it was. I wasn't watching at the time. I actually popped back in probably about a little bit after the Australian jobs data, which was really a muted reaction. But I saw that she happened to cover on a dollar yen, and I think there was another pair she had. I did mention this just now in the chat room. We had this yesterday for our buy short resistance. Actually, I think for the last couple of days, which was this 2479 up here. We talked about, we've seen a little bit of short covering, but really that 2479 wasn't even much to talk about when you considered the fall that the cable had. Just for a moment. So, it looks like, oh, wow, getting a little bit of buying here. Well, you know what? It's such a tepid short covering, but it is, but we're looking for a little bit. It's just, don't need to tell you it's been down, down, down like the submarine horn. But like I said, we're going to come up to this initial little resistance, which was our bias chart. I think it's for the last couple of days, but we had it yesterday. But I think we had it for the last couple of days. It's 2479. It's not saying much. Let's see, we'll get to the cross rates. Obviously, we saw a nice little reaction here in gold. I'll tell you what, that gold was something else. I'm still surprised by this. I mean, the key driver here was on the silver, and I don't even follow the silver market, but look on the 2-hour chart. This had like a little gravestone doji, and the market reacted with this jump up in here, and looked like the market was a little bit tired. Might have knocked some people that may have been short the market, and it looked like it set up for a pullback. And we saw the gold market, had already. I was looking for a pullback when we were over there at 1410 and to 1405. And then as we broke lower beyond this, I said, you know what, this is open to move lower. And I think it was, but this silver just dragged this market up with the vengeance. And boy, did it clip a lot of people. We talked about this yesterday. Some people were trying to short this. And I'll tell you what, as they say, sometimes the best trades are when you don't take it all. Had it not been for the silver, well, obviously that's the reason why gold will move higher. But I tell you what, it kept me from jumping in and trying to short this thing. But as the gold moved up, there were people trying to take this on. And I mentioned this in the daily roundup. You don't want to be taking or at least in the chat room, I think it was a daily roundup. You got to be careful because as this market got past these highs, they know they had that undertone bid. So the market wasn't going to pare back because we had some resistance at 1422. But even on any pullbacks, they knew anybody that was short from in here was going to have to pay up on the close. So, I think we ended up closing around 1424. And then obviously as soon as they opened it up in the evening session, if you want to call it that, afternoon in the States. But anyway, boy, did we jump up. Now we've paired back to come back to this 1420. So, market respecting these levels coming across. This was a good key, interesting level here. in the gold that I took a quick scalp on, which was last Sunday. I haven't done anything in the gold now, and I'll tell you what, I would have been, in light of this, I'd have been taking this on with shorts. I am so glad that I didn't take it. I didn't pay on it. The only jump I did was try and take advantage of to play with it, which was very late, was a scalp short on the dollar CAD, but that was it. But obviously, this was a big, big mover. Let's go and go back into the main chart, and we're going to catch the news and get the flavor for the day. Um, on the morning bid, as the clock ticks, what price? No deal Brexit. Opponents of a hard Brexit in Parliament may try again to assert their influence today by backing a bill that would require the Assembly to get regular updates on the situation in Northern Ireland, a device whose main goal is to stop any future PM from suspending Parliament to usher in a no-deal Brexit. The vote does go ahead today. The big question is whether any cabinet members, among them Finance Minister Philip Hammond, will join that effort. Before that, the UK's official forecasting body is due to give a series of predictions of the UK economy, including what would happen in the event of a no-deal Brexit, according to the Times. The body will conclude that such an outcome would take a massive 3% chunk out of GDP. G7 finance chiefs wrap up the meeting days in Chantilly with closing news conferences. I don't want to spend any time on that. Let's go straight to the markets. As competing factors jostle for attention, the U.S. earnings season has muscled into the fray and knocked world markets off their perch. Amid anxiety over the big banks, net interest rate income, margins, rail freight, giant CSX warned of the impact of the ongoing U.S.-China trade war as it was reported below forecasts in Q2. Moving on, stock indexes were also in the red overnight, with the S&P 500 clocking its biggest one-day loss in a month. The darkening skies have been reflected in rising expectations of a 50 basis point interest rate cut by the Fed later this month, with futures markets now putting in a 1 in 3 chance of a move of that. With a quarter point fully baked in, 10-year yields slip back toward 2.03%. Obviously, this is what helped the gold move higher. We mentioned this in the daily roundup. Certainly with not only was gold able to move higher on the backdrop or the silver dragging up, but obviously the slide in U.S. rates did attribute to that continued bid. Dollar-yen fell back to its lowest levels in 3 weeks, aggravated an outsized 2% drop in Japan's Nikkei index earlier, the biggest drop in 4 months. And the dollar index recoiled to a euro dollar, and it nudged up to 12.40. We're going in. I just want to touch base on this because obviously this was key, or you would think it would have been, the Australian jobs data, but as I mentioned, the reaction was very muted. The Australian dollar was 3% firmer, or 3/10 firmer on the day at 70.29, having bounced from support around 69.96. Boy, that didn't pare back much, but the Australian data showed a rise in surprisingly small S&P 500 in June, but all the weakness was in the part-time work, with full-time jobs rising 21,000. Yet with the RBA already having cut interest rates in June and July, the data was not considered weak enough to add to the case for another easing in the short term. The data does give the RBA room to stay on hold in August, said NAB economist Kexin Oxwang. It will likely appear to see what impact recent cash rate cuts and income tax cuts have on the economy. The RBA is far from alone in having to ease policy, with South Korea's central bank on Thursday becoming the latest to cut rates. And lastly, we'll finish up with the dollar. Dollar softer on U.S. yield. We referenced that, and the Aussie shines. While expectations of 25 basis points are baked into the money markets, some investors are gunning for a 50 basis point cut. Morgan Stanley strategist said in a daily note that the overall outlook for riskier assets remained bearish thanks to disappointing U.S. earnings report and weak prospects for global trade. All this gives strong reason for the current internationally focused Fed to consider cutting rates by 50 basis points at the end of the month. They said a 50 basis point cut would weaken the dollar sharply, particularly against the high-yielding currencies, they said. And we already mentioned about the Australian dollar. So let's go on and move on now to the bias chart. We're seeing the peso move a little bit higher. I already got out of my second of the half. I talked about this yesterday, or at least I don't know, in the chat room. I bought the 38%, and then as the thing paired back, I was looking to pick up the 50, and it kind of hung around. So I actually canceled that order. And when this thing fell out of bed a little bit, I remember posting that in the chat room. I picked it up here, so I just kind of jumped out at the last half of the towards the end of the afternoon session, And then I was mentioning in the chat, I would be looking to get out right before 1910. And we opened around this, or at least when I got up, we were just a hair below 10. So I'm already out of the other portion of that. We'll see what happens. I think Blake was looking to potentially for a move up to 1920. I don't want to hang around my positions too long, but look, here's the cable trying to make this run up in here. Let's go on and move into the bias chart. So we have 1263 because we weren't just not expecting a whole lot from this euro, and we're certainly not getting it. You see, here's the bias chart. There's 1263, no changes, although we'll take a look at it here on the daily. You know, the key is this 1285. We've been talking about that, and I thought this would just have been a signpost on the way to getting above 13, maybe even challenging 1326 once we got here, and the market just simply couldn't do anything with it. I mean, it worked like a hard ceiling, and we rotated lower. And even when we're picking up, and the market's put in, I think, a pretty good bottom because you would have thought at least it would try to challenge 1180, maybe to dip lower, and this market simply just cannot pick itself up. Um, Really a piss poor reaction when you think about it. The dollar hasn't sold a big time, but we have seen U.S. rates come down quite a bit. But obviously, the bond yields are what's working as a drag on this. So once again, no change here. We're going to go and keep this here at 1263. It's going to have to prove itself. Obviously, the big key is 1285, but heck, that thing's 50 pips away, and this thing can't even muster much even a rally. So we'll stay with 1263. Support, we're going to go and keep it at 1180 in case this thing were to rotate lower. Maybe not today, but I'm saying if it starts to rotate lower, you know what your risk level would be there. Let's go move into the cable. So we're just trying to gently pick ourselves up. Like I said, it's just some very minor shortcoming because if you look on the daily, you don't see anything of any significance whatsoever. But we're going to move into the 2-hour chart. And there's our bias chart resistance. With the cash dollar weekly, maybe we can push a little bit higher, but until it's proven itself, I'm just going to leave it there. 24.79, so it's still going to remain the bias chart for another day. Bias chart resistance, I think we'll get a little bit of reaction from this area, so no changes there. When we're looking for support, right there, 24.32. There you go. And let's go into the Aussie dollar. Well, we're still hanging around the 70.27. And we've mentioned this so many times. You can see this goes all the way back down here. So it's a huge level. If the dollar does start to finally, with gold moving higher, commodity currencies moving a little bit higher, benefiting, um, it certainly isn't hurting. Let me put it that way. And with the dollar potentially to rotate a little bit lower again, we can still push up higher here. I mean, if we can get a foothold, we have that opportunity. Previously, I had mentioned to come up here really to 70.80, but in the short haul, 71.20. But we're going to go back to what we had before, which is our 70.48. I don't know if we still have that as our bias chart resistance. We moved it from 70.40 to 48 to 40 we'll move it back up to 48. The Aussie dollar has a chance really to move higher beyond that and trip the stops, but the market will, you may see some bulls lay off a little bit in that same area. We're going to keep the 69.81, but holy smokes, this thing barely backed off. The lowest it was shown here 69.96, so we'll keep the 81 in place though. And let's move on to the Kiwi. Man, doggone, this Kiwi has been just nothing short of remarkable. It, if you think about it, we broke here and, we failed here on a Sunday. I remember opening up on the Sunday session right here. I remember doing the analysis, and we're looking right for this level, this confluence. Not only the level, but the 50%, and the market rotated lower, and boy, the thing just ended up giving it, after a pullback to the 66.60, made one more turn, and boy, it looked like, man, that could have been just I don't want to say a false breakout, but it's like, boy, that thing just really came unglued. And then, boy, did this thing rise like a phoenix from the ashes. Look at this. And it's still moving higher. So this is what we had as our bias chart resistance. And this market is still trying to push beyond that. I think it's going to have to prove itself. So I'm going to go on and keep this bias chart resistance. Even though it's a little bit above it, it's going to have to go on and prove itself. I think we had 67, 30, yeah, 39. Make it prove itself. Now it's 4 pips above it, but it's going to have to prove itself because it's had a pretty good stretch. So be wary here, because even if we pop up a little bit here, market's pretty well, had a pretty good little run. We may just, once again, kind of peter out a little bit. We'll find out. I mean, obviously 67, 66, but I'm not really willing to give that yet. I would have to let this market prove that it can get that move after we've come back up in here. May have to pare back a little bit and garner some more buying here. We shall see. On the support here, we've got 66.80. That's going to remain the same. And with this, we're going to move into the dollar CAD. Well, you're not seeing much here on the daily. We still have this, if we had at the beginning of the week, was a move down here to 29.95. Obviously, a little bit of divergence between the Bank of Canada and the Fed, but it didn't make it down to 29.95. And I think some people thought that this thing was going to move higher. And we had 30.77 as our bias chart resistance. Here, you saw that, and we kind of held it back. The market got above it in the, in the post New York session. I think we were at the very end of the day. We made a little push here. I thought there was opportunity. It could move higher, but I still like that 30.77. We fell back by the time we came in onto the European crossover. This market was already, I think, down to 30.55 at the time, and we took a dip, and then we made one more run up here. We kept the 30.77 again, and the market ran out of gas right there at 30.77. And boy, did we roll back. Certainly, the move in the metals certainly attributed that commodity currency strength. And I had our bias chart support. We had it for 30.36, and the support low was not bad. The low was 30.36, 30.35 and 7/10. So very fortunate there. Look at that. I scalped this. I got out before they got to that level. I think it was right around 41 or something like that, or 40. But yeah, that held at 30.36 and 36. I don't see any reason to move it. I think we're just kind of stuck for now. So once again, I'm going to keep it there, 30.36, 30.77, and let it prove itself. Let's go into the dollar peso. Obviously, that's moving up higher here. A little bit of resistance here. I probably jumped out, I guess, a little bit too early, but that was my plan. Was I did get lucky on the ad at 61% yesterday. Well, maybe not lucky. When it dropped, I didn't even know it was going to drop, and all of a sudden, see it, and it's already had the fib up there, so I was willing to go in and grab it. So that was the ad, and so, but I'm already out of here. My plan was, I mentioned that late in the chat room, I'm out of here if we get that move anywhere, as we get a move towards 1910, or I said before 1910. So we saw that this morning. Blake's looking for 1920, although Blake had made a phenomenal, not phenomenal, but a very, very good case of why he was looking for a couple of days ago, and he's been playing it long, and good on him, has made the case why this is a on the long-term trend line is a 1 to 5, 1 to 6 potential here, and so he's been playing it long. So I'm very glad for him, doing very well, very well uh, on him for Blake. But let's take a look here on the daily chart. You can see a little resistance level coming in right there. Now Blake's looking at a huge trend line, which came in, comes in down here, and why Blake was buying. And I remember on the air, Blake accidentally added even more, got more long than he intended to, which was turned out to be very, very well. I think it's a couple of days ago. So, and I think he jumped out and then got back in again yesterday. I think he's looking for 1920. So, well done for him. We're still not doing a whole lot here. At least to me, you see right there, 1914. Let's call it 1914.65. We're going to use that as our resistance. Remember when this thing was jumping all around here and we had the 1916.7? Remember that? That was after the foreign minister, and then we'd already paled back. Let's take a look here and see if we see something. So we've got 1914.6. Let's remove this. There you go. You see? There's that level. I want to go with this. Not, yeah, there you go. 1916. Let's go with that. And you see right here, look at that level coming across. If we make it up there, then that'll probably work as a pretty good little pullback. 1916. I like that. Markets are, oh, that we did have that, 1916. Fantastic. If we get the pop up in here, this is probably where the market will take a little bit of a breather here. As far as support, well, $19.059. I must call it 6. And going into the dollar yen, we had our buy chart support at 778 and did take that dip down there. That's what we came up with. It. We just kept it there with the 778, and we did go down there. And I told you, Amanda had covered her shorts down here. As we dipped, I think it is at 67. If I saw it on in the Asian session on the chat. This one, I mean, we're coming into support. I'm not sure what the market wants to do here with the dollar yen. I think long term will roll over, especially even with equities weakening here. But for today, I'm not sure we have a whole lot left here. You can see that 832 has really kept this market. We've had that 832 for the last 2 or 3 days. If we see a dip here, we'll give it the thought that it can, if it does make one more cleaning, we'll go with the 750. But we've already hit that 778. So I don't know, like I said, this would just be if the market wants to challenge it. I think longer term will go lower, but on the short haul, let's go with 750. And on the upside, I think the market is willing to challenge this thing here. So any runs today are going to be squealed, are going to be, they'll catch them at 797. Let's go into the cash dollar index now. We're going to move this lower at this point now, but I think this is the way this market has come back and forth on this trend line. And I thought it was important to keep it. I like to do it through the bodies, but once again, when we recaptured this, boy, did this say a lot and open the door to move much higher. We took a dip back, re-strengthened itself, and that showed you this market really had still some strength behind it, and it held yesterday. I think we had 97.45 at the time. And I think that's when we came in the air. We were doing that, so we had 97.45 as our bias chart resistance. That's right, we had that as a level on the 2-hour chart. And we talked about the significance of that. We're going to move. Let's go ahead and take this off for now. But boy, this dollar index, it's still holding up well, but we got the 97.02. It's just a matter of what's going to happen with these rates, and those rates are certainly was helping boost up the shiny metal. Also, obviously, silver had dragged that up. But my thoughts is it's still holding here, this 97.02. The next couple of days are going to be big for the dollar. I think so, because if we do break here, that'll really open this. But once again, the euro's having a tough time with Bund rates, and the euro comprises 56.4% of the cash dollar index. So the cash dollar index is going to have a hard time trying to get lower, although it comprises other markets. But I'm saying it's going to have a tough time trying to move lower if the euro can't pick itself up, and the euro's having a tough time where Bunds are at. So Bund yields. Tricky stuff. Let's go into the 2-hour chart. And you can see that 97.45. We talked about the significance of that yesterday. Look at this, how far this goes across. Watch. Look at that. You see that? So that 45 is pretty key. We've rotated lower from that. But it certainly hasn't matriculated into the euro. We're just kind of holding our own here. I don't have a real good take on what this thing wants to do. I really don't. What we're going to do is we're just going to go with this 97.21. We'll call it just a hair higher. 97.23 for the bias chart resistance. This 96.81 is a decent area, and you probably see a little bit of a bounce. My concern is if we rotate lower, the market is going to want to push it. So rolling into tomorrow, and probably all the way through to tomorrow, will be this 96.68. I think there's support here at this 81. My concern is if we break down to here, you may bounce, but the bounce is going to be only very limited, maybe like 14 ticks, and then we're going to come down here and rotate, and it's going to spook the market, and then the market's going to make another mad dash down here. And this is where the real support would come in. So that's where we're going to go with that. Right now, we'll just switch into the cross rates. Well, we gave the what we call benefit of the doubt to 72.83. I believe we were already above there at the time when we came on air yesterday. So this 72.83, that's going to remain the same. No changes. Support 72.33. We've been as low as 72.42. So there's not going to be any changes here on the Kiwi yen. With that, we'll move into the Euro yen. Well, boy, this Euro yen is really hugging the commode. Look at that. Just we had 21.17 for support and 21.79, and it just cannot simply pick its head up. Um, let's go move into the 2-hour chart. Obviously, you saw the yen strengthen, and we saw that in the news too. Is obviously the Nikkei took a pretty good whack, which allowed the yen to strengthen. I'm going to go with the support level right here. You see that 20.96, which is they've been just a hair lower, but I'm liking that level there. And then also the yen might be a little bit overdone here. So we'll go 20.96. On the upside is going to be right there. If we get this euro to pick up a little bit, it's not even saying much, but it's going to be 21.36. You know, we're not even going to give it up to 21%, just 21.36. And let's go into the euro odd. Man, it just can't pick itself up after. Remember this thing when it was up and away? Obviously, the Aussie was very, very weak, and you couldn't hold this thing down to save your life. And I talked to one gentleman, I mentioned that before, in Australia, and he was looking for 168 up in here. Remember, I mentioned this yesterday. I didn't even stick around. I was actually shorting up in here, but that's when we're getting these quick little moves here. But since then, I've been a steady drumbeat lower. But sometimes you get into these areas where the market is just sitting there. And it's just not on forte. Just we just sit. But look, obviously, if you would just hung on, as I mentioned yesterday, I think one of the guys was saying he's going to have open a long-term account so that he doesn't jump in and out. Because you can see here the moves have been just um, relentless. I know Amanda had benefited very well from that. Um, but we just can't seem to pick ourselves up from here. So the support's going to be right now at 59, 59.62. We had 60, so we'll keep the 60 right there. And on the upside, we'll go right here if we get a little bit of a bounce. It's going to be 60.46. There are no changes there. And we'll go right now to the Euro Kiwi. I think we had the resistance support there, which was right at the 61%. 66.80 here, right at the 61%. I think we're going to get a pause here. I mean, the euro may want to, not the euro, but the Kiwi, take a little bit of a pause here. We're going to go and keep that 66.80 in place. I mean, we've dipped lower, got as low as down to 66.40, 43 or 66.44, but this 61% is, we're going to go and stay there right now. We're 66.72, only 8 pips below it. We'll keep the 66.80 as support, which is the 61% on the upside. $67.28, about 50 pips behind. And let's go into the Aussie. Seeing the peso still hang around this area, 19.11.4. We got that little limit level that we had there, but we're looking for 19.16 on the peso. Just have to notice that. This market sure is, as I mentioned here, this market used to really have some pretty good moves here. I want to say back in the day, but I mean, it wasn't that long ago when we saw some nice moves. And look at this, quiet as a doggone church mouse. No changes here, none. 76.06 downside. We did have 75.64. We've since moved a little bit lower here. Obviously, with the important strength in the yen. Just right here, 75.51. If this thing's going to try to make a hold, and we'll keep the 76.06. So 75.51. Obviously, the strength of the yen pair is dragging this thing. We weren't too far off. We're up 13 pips there from where we have it now. But now let's go and move into the guppy. Well, we'll continue to hang around here. If you consider the strength of the yen pairs, this thing was so low, I guess it didn't have too much lower to go. I mean, we're below the 78%, but we're trying to make this hold here. You can see right there. So we'll just call it 134 even. We'll work a little bit higher off of that. We may have a bottom in place here on this guppy. Right there. $33.90. Oh, you see, it's not too bad. You're seeing a little bit of a bounce off of this. I think we may have put in a short-term low here. Let's move this in. 34.02. We may finally start to see, and we had 34. That wasn't bad, so we weren't too bad off that. 34.02. Maybe we'll be ready for a little bit of short cover. That would take us, it's not saying a whole lot, but it's still a good 50 pips away. 34.97. We'll keep that. And let's go into story mode. We've been talking about the disparity between the exponential moving averages. To be careful here. Um, you can see how wide this is. It doesn't mean we're going to see some huge shoot up, but we should probably potentially see a move back up here towards the 78 cents. Um, let's go and move into the 2-hour chart. $76.63. So not bad, just moving at 3 pips lower. And on the upside, 77.78. That's 2 pips higher here. Let's move into the main screen just to close things out. Well, you can see here that the cable is right here to the bias chart resistance we've had for the last couple of days. And we're keeping it at 24.79. Doesn't mean it can't push up a little bit higher, but it's going to prove itself. And as we mentioned here, you see that right there? That makes logical sense that they would make a little run, a little trouble in here in this area. But we've already been pushing higher, so once again, it doesn't mean you can't push up a little bit higher towards 24.97, but this is a decent area here where, even anyone that played long probably wants to take off a little bit here, not trusting this cable. Peso, as I mentioned, 1916, we're looking for the bias chart. Dollar CAD just, to me, I think it was a little bit trapped in a range. I thought we would already tag 29.95 by this time, but we certainly haven't. And we haven't been able to push a whole lot higher either with the strength in commodity currencies. Dollar yen, we did make it down here to at 778 and a little bit lower, so it's kind of holding its own here. Muted reaction for the Aussie after the jobs data, and the euro, what can you say, with bond rates still rallying higher. Not really, bonds rallying higher, obviously rates lower, is really having a tough time for the euro to make a move here. So that's all that we have here for the European crossover webinar. We'll see you in the FX Daily Roundup, 12:30 Eastern, and thanks for joining us here.